Welcome to TradeTheNBA.com. This is John. This report is for the 21st as we head into the traditional Thanksgiving weekend. Usually you're going to get a nice little push. We're beginning with just a tiny fraction higher here to begin anything. We're not looking at super great readings in any way, shape, or form, in the sense that you have science still leading. However, you got steel above, so you didn't have the steel cross below, which would be a short signal here on the DOC. Orange was outside the range. It looks like it's about to pop back into it. We do have rising short increase here. It will need to exceed this previous peak level. Let's see what that level was right there, 1.18. Currently it's at 0, so a little bit more to go. We did get the rejection right here of long-term buyers on the red pushing through into the next zone. That would have been enough to really break out into a strong push, but secondarily we would just need a significant increase in shorts to make that work. Shake out modestly lower, not overbought in any way, shape, or form, so we're just in that what we would call the malaise kind of soft push to the higher side. So kind of benign. You can see the NQ slightly behind where the S&P is, because the S&P is peaking at highs, and of course well below where the Dow is. In fact, if I shrink that, we can see the significance of how underperformed the industrials were. And isn't it amazing what a change right after the election? Industrials became the hot commodity. They were overbought for a period, all the way through here, and you can see even though we maintain the height, not overbought anymore. It's always important to see that distinction. My Euro chart from before, I promised you we would get back to here, the 105 range, and sure enough, there it is, 105.9, and still looking ugly. Interesting getting to an oversold point from midterm buyers, but not necessarily from long-term buyers. Haven't even broke below the negative 13. That's interesting to see, because it suggests that you could have even more decay going on here. We're finally getting into an oversold like we had here before, which often can lead to a nice strong bounce back rally. Hasn't happened yet. Bonds, of course, like I promised, still fading. And oil holding up okay, despite the fact they just are running out of places to stick the stuff that they've already drilled, and the capacity for drilling more exists. That also puts downward pressure on gold, in the sense that there is no real inflation at this particular point. The only reason would be at this time, from a strategic standpoint, to start buying on dips of gold, still in a weak mode, simply because if there is the potential of increased economic activity, but again, like I've said to you before, this isn't going to happen overnight. You're going to be well into the following year, so there's going to be plenty of opportunity to jump into it. But I think that you get early signs of it pushing labor costs up, then you'll see a really rapid jump in gold really quick. At this particular point, though, like I said, you've got a massive amount of labor that is not working, and while you might get bottlenecks in certain industries that haven't been able to ramp up, you're still a long way before any of that's even going to take place. And of course, any stimulus packages or whatever that get passed through Congress, or theoretically could be a couple 100 days out. So not really relevant. We can see we've gone into basically low end right about here, and the upper end is, well, currently right about where we're at. So a breakout from this point could lead to a significant little bounce up towards the 20. I mean, when you're at this 2185, we get to 2190, you're looking at 22 as almost a given, just from the press to move towards that. You have holiday light now, so we might get some little crazy action going on going into a Thanksgiving weekend and that. So always look for shenanigans at these particular points with holidays, schedules, and that. And particularly as we get in the middle part of December, we're going to definitely get more of that. So should be some fun action. It'll be a little bit lighter volumes, but all in all, I think that it is still a decent play as far as following what our signals are. In this case, we can see on this 5K right now, getting a little overbought right there. And maintaining that, so probably, but we've got the cyan below, so at least it's still long at this point till that cyan breaches, and then we know that we've got retraces that are going to happen, at least coming back from most of the move down to the 82 range. there you have it. Look for me on the Skype chat as always. Talk again later. Trade well.